All right, so we hit on this a bit earlier, Fred. Bitcoin and Ether, in all fairness, outperforming the market year to date. Bitcoin up right around 8% year to date. You say this is part of a shift due to how the world is just viewing monetary risk and geopolitics. What is the shift that's taking place, and why do you think Bitcoin's benefiting?
Well, Bitcoin benefits really from global liquidity primarily. So if you think about markets right now, you have U.S. government increasing liquidity, interest rates have come down. You have other countries also increasing liquidity. And Bitcoin operates in two particular worlds, the developed world and the developing world. In the developing world, Bitcoin is really a hedge against the decrease in value of local currencies. You can see what's happened in countries like Iran, Turkey, Venezuela, other countries like that, where their currencies have been debased, and it's a great way for people to hold value against that debasement. In the US and the developed world, it's more of a store of value. And you've seen now banks come into the market. You've seen TradFi institutions really come into the market and adopt it. And so it becomes much more affected by global liquidity because it's treated more as an investment asset and an asset that trades sometimes like equities, sometimes like gold, but really is driven primarily by global liquidity.
All right, you mentioned gold very quickly. I was talking to a lot of different people about this, including Barbara Goodstein, who runs R360, a community for ultra-high net worth individuals. They really value Bitcoin. It's kind of scarcity is the argument for them. They believe it's more scarce than even gold is, and they see more value going forward. But scarcity is one thing, utility is another. Everybody that we have come on this show says that Ether is really the future of cryptocurrency because you can build things on the platform. What's Bitcoin's future other than potentially being stored value? Is there some other utility for it?
Well, Bitcoin has a couple of dynamics that are quite different than Ether. Ether and the Ethereum network is really a technology platform on top of which you build different tokenization solutions. And that's what Ether is designed for. It's really a programmable network. Bitcoin was always designed really as a highly decentralized form of storing value and exchanging value. And Bitcoin will remain that way. Its scarcity is one key thing. Another key thing about Bitcoin that's very unique is the fact that there is no central entity that controls it. In the world of Ethereum, the Ethereum Foundation, Vitalik Buterin, and others have a huge say in what happens. You see that the Ethereum network has continual upgrades done to it and changes done to it. Bitcoin is stable. It's like the internet in a sense. You know, we're still running the vast majority of nodes on the internet on TCP/IP v4, which is a technology that is decades old, even though we're now at TCP/IP v6, generally speaking. And so Bitcoin is this very secure, highly decentralized network that allows people to store value and move value in a way that isn't controlled directly by governments, and allows people to have certainty in the fact that their assets are protected regardless of what happens to other governments. Ethereum is really the currency that's used to pay for transactions and activity on the Ethereum network. I mean, ETH is the currency.
We mentioned the Senate hearings that are happening, two markups. One of the issues there is decide on regulation, the CFTC or the SEC. How important is regulation when it comes to Bitcoin? And when you're looking at this, do you think it should be regulated more by the SEC, more by the CFTC? What's your view?
Well, Bitcoin, since a long time ago, has always been viewed a commodity. There isn't a central party that controls it. It's not dependent in any way on any of the rules that touch on the Howey test. And so it's always been regulated as a commodity and will continue to be. So it's not really impacted by any of the newer regulations that currently are under consideration. If you think about the Clarity Act, this really has to do with stable coins. It has to do with yield on stable coins. It has to do with what tokens are considered security tokens versus utility tokens, to use kind of an older nomenclature. Essentially, everything is a security until the SEC determines it isn't, based on some of the drafts. And I think you're going to see a lot of back and forth between the various decision makers regarding how this ends up. But this really is more a treatment. The Clarity Act is more a treatment of how tokens, capital raising using tokens, and the tokenization of real world assets will be handled, which is something we need. We need clear regulation in that area. And we need clear determination regarding when is something governed by the SEC or regulated by the SEC and when is something regulated by the CFTC. So I think movement and passage of this is very important.